All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for ya, and Netflix saved this stock market. My goodness, it was crazy, but it is all temporary. Literally, this morning, man, that bull market rally, it was in full effect. We were up 2.5%, and things were looking good, and you even had good Goldman Sachs, J&J a little bit, Lockheed Martin, again, it's like a little bit, but they found ways to do better, or all of the earnings guidance was very low. But even today, all of the gains faded, and we had a little volatility, but that earnings after the bell, it is going to have a big effect. But now we have more earnings on the way, and this volatility is getting crazy. But before we do anything, I got to start with this pretty picture, because like, Chad, this is the are you sure point. And what I'm trying to say to you right here is like, literally, are you sure you want the market to rally? That is your decision, okay? We're going to play the futures and the stocks back. I'm going to get both ways, you know, so I don't really care. And then shout out the long term, but like, take a look. What this chart is showing you is the amount of S&P stocks that are trading 20% below their 52-week high. So this is a bottom indicator. I've brought this up years ago, so I'm very surprised to see some people bringing it up today. But if you look at it right now, you got about 70% of stocks trading 20% below their 52-week highs. That means we need a little bit more. But if you notice, the bottoms in 2002, 2003, 2008, and 9, and then 2020, all of them hit this criteria. And then like 2010, 2015, 2019, these were other points. And if you even go back to like 2001 or even like 2008, I think that one's more comparable. Like look at 05 and 09, you'll notice it went up to like right around the 60s, came out, and then when it broke above the 60s, that was leading to the 08, 09. But pretty much what this is showing you is that, well, we might get a rally, but if it is going to be a bottom, I mean, some would argue there's more room to go. And with Powell and everything else, and again, all of these moves, it is going to get wild. But now the market has earnings, so we're going to see what happens. But we have a lot to talk about. I got the recap of today. I got a little bit of fun facts for you to understand what's going on. We're going to talk about the macro, how it played into today, which you didn't really see much of, and then really what we're looking for moving ahead, and then the plays, baby. Oh, we did good. We had some plays that we're going to go over, but drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. I did it right with my hands this time, baby. We're going to see you there. It's free 99. And I'm telling you, man, if you want fast news, information, I don't know what you're looking for, but you might be able to find. I mean, it's diverse is all I'm trying to say, baby. And are you ready? I'm excited, Chad. This is crazy. Shout out to long term. That's my like run it speech right now. Man, the long term, run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, ladies and gentlemen, as far as the first key, you know, we were talking about bear market rally and people were saying it, but now you are starting to get evidence of it in the earnings. I hate to break it to you, but you really have to squint to see bad in any of the earnings so far. Again, Morgan Stanley, they didn't do too hot, but it wasn't like a Grim Reaper or totally abysmal. Most of the banks did good. Now you have Netflix, again, Johnson & Johnson in the morning. They didn't do the best and they lowered guidance, but again, analysts have already guided down leading into this, and that has been part of the problem. But everything, for the most part, these earnings have not been bad. So I want you to understand it. And now this is what the volatility is going to be caused from. Like literally, the effect that you are seeing right now is that the market is looking at these earnings, and that is active data and active guidance. You're hearing companies saying, hey, this is how we did in the last quarter, this last 3 months, and then this is what we are expecting moving forward. Now, sometimes it could be really bad or really good, but the point is the market is focusing on that now instead of now backward looking econ data. Again, that's why CPI Maybe that's why we got the reaction. Everyone's still waiting on employment. And again, that's the macro, but literally you're having every day now for the next couple of weeks until Powell, you're going to have an active guidance and numbers shoved in front of your face. So that is what the market is focusing on. The volatility and candles are getting crazy, but as of now, the earnings have been decent. Now, like I'm saying, with the market, even the nature of earnings, all of that is going to be temporary. But if this continues, that is your evidence to the upside and our little rally until Powell or the midterms. Otherwise, all it takes is one to change it from here. But just be prepared for this back and forth now, as things might get confusing. You're going to have to now juggle macro and earnings data in front of you, and how it's going to move the indexes will be weird. But again, we will find our signal, and the bonds ain't playing along. But that is key number one. And now key number two, let's take you a little bit into the macro now. The pound and the yen, they were in their own little world today. Half of the rumors, or half of the run-up in the futures, there was like a Bank of England rumor, then it got denied, but the market stayed up. The pound dropped 0.5%, but the market still held up. It's still, even when it did come down, it was up more than the pound was down. It really ignored the moves. Even the yen hit another low. People didn't really react. The dollar was down for a little bit, then it climbed, but then the bonds are still disagreeing. I went long on the bonds last night. We're going to talk about it. I wanted to play, but surprisingly, the bonds even started hitting more and more lows. Again, that 10-year keeps going up. So really, with everything I'm saying here, and again, with earnings and depending on how we get it, and thankfully, there's a couple more earnings and it won't be as active till next week, but unless there's like big rumors out of the yen or the pound or big action, I don't think it's going to take us off of this earnings focus unless it is big. Like literally equal and opposite reactions right now. If there's a rumor action, it has to be sizable to get people to stop focusing on earnings, especially if we get more data again, especially if it's good. But that is key number two. And then finally, ladies and gentlemen, how we're moving forward, what I'm feeling. I think this optimism is going to last until we get the first Grim Reaper. So there might be a couple things, whether that Grim Reaper shows up in the form of macroeconomics, whether it is the pound or the yen, or literally one of these companies, just like, again, Tesla tomorrow. That one could be awful. Again, you're going to have a couple more. I think Snapchat, that's the last one. And Snapchat kind of scared me. I love him, but it's like the fear of Snapchat. That's just, hey man, finger to the sky. That's word to, anyways. But until that Grim Reaper shows up, I think the markets can hold it. But now, this is something I want you to keep in mind, and we've been noticing it, especially during earnings season too. But if the market moves very big pre-market, I would expect a smaller move or a tighter move during the day. If the market moves small pre-market, then get ready for a bigger day. But this obviously is not set in stone. And like we've seen some days where it's big pre-market and then big throughout the day. But now with earnings and how this is, even yesterday, seeing how we brushed off rumors and everything, just a lot of moves are happening pre and post market. So keep that in mind. But as far as what we got to watch, man, it's very simple. We see our factors. Right now, it's earnings until something changes, but we're gonna have to ride the wave. And ladies and gentlemen, it's already crazy, so I hope you're ready. But let us get into the plays. So, right off the bat, we made a ton of trades today. I got to realize over $4,000. I cut out a lot of upside, so I have some still to the upside, and we got some of the big plays like ACAM in the futures, but I did take some profits here, and we're going to go over it. But we got to start with the plays. I'm excited about this one. We brought this up yesterday for the sympathy. Again, it all depended on Netflix's report, so it worked in our favor. But Disney, I went for shares today. And now after this report, oh my goodness, I think it's going to be on fire. So tomorrow, Netflix as well. I'd watch that 300 level. I think it's going to be key, even pre-market tomorrow. It does depend how this conference call goes. I have not gotten to listen to it yet, so we'll see. It did stay in their statement. They see a return to growth, and I'm telling you, they sandbagged it. That's it. Like pretty much the guidance was so low and everybody was so pessimistic. It's something we've been seeing, so we'll watch how this season plays out. But Netflix is going to be one to watch. Disney is the sympathy. But now why I like Disney a lot is because Disney's earnings were actually good in August, or at least the stock went up. I mean, here is Disney's chart. In August, it was trading at 120. Right now, it's 20% lower than there. Again, Netflix, I mean, even there, shout out to long term, baby. We have that in the Netflix and now we're in the long term, and now we're up 20% on that just by buying it that low. So Disney, they had some good movements already. If this kicks into gear, I think they may have more meat on the bone in anticipation. I have 50 shares. I bought them this morning at 99.62, so it's even 2% higher. You could have got it a little bit cheaper, but I'm really going to like this. Disney and Netflix tomorrow. Definitely keep your eyes out on them. But that is play number 1. Then play number 2, baby. Apple. It was a weird one today. He got above that 142 level, and it's interesting how it's traded, but there was a weird rumor today. It was like an old rumor that hit as it's new, and honestly, everyone's still debating. It's kind of weird how it's been discussed. It caused a big drop there. Even the market came down. We were able to bounce back up a little bit, and then even after hours with the Netflix report, the NQ, NASDAQ, Apple, they started going. But here's the thing. Apple now, after that little drop, if tomorrow is a good day and we get more optimism, I mean, they are lagging behind, so I will like this. But watch as they get into earnings, and now depending on the earnings vibe you get tomorrow and just the fact now all of the tech is kind of going up. Apple was a little slow to get to that 142 there over the last couple of days. If things keep running, there will be meat on the bone to the upside, so watch out for them. That is play number 2. And then play number 3, baby. This one's related to earnings. You can look at the company that reported. It would be UAL, but I'm going to be watching Uber and Airbnb. Any of the travel stocks tomorrow, they're going to get hype off of the UAL. They were already running up leading into it today, but that UAL earnings was good. Again, I don't like airlines, but they did good, so watch out for that. But this is what I want you to watch for. Watch if it goes up in the morning and then fades within the first hour or two. Otherwise, if travel is able to hold up beyond the first hour, even like literally until Euro close, then I think it's going to be a leader all day. Again, that report was good. It's bringing some of that optimism, and that could have some good follow through and now preparation for all the other earnings. So we will see what happens, but those are the main plays. As far as everything else, let's start with what we did today. I actually opened the day before the market opened. That ES from yesterday, I closed out at 3672 and I bought it at 3696. So almost 100 points. I got about 33 or 30 or 32 to 3600. I'll have to double check, but somewhere in between there. A very nice profit. We did hold it through. Again, this one a little longer and it paid off there. So that one was nice. And then we went on through the day. Then I opened up the Disney within 4 minutes. I actually think the Peach came up and I didn't want to buy the calls, but I was looking at Disney. We brought it up. I decided to go with those 50 shares. Then I wanted to flip the ES or the MES, and I accidentally grabbed 2 of the giant ESs. So I took a $200 or $300 loss on that. That was a mistake. I flipped it for the MES, and that one only turned into, I think, like 20 or something dollars. And I did another MES by the day, had like $100 net profit total. Then I bought 50 shares of NVIDIA. Again, SOXL, we brought that up on the watch list yesterday. It gapped up 9%, came back down. NVIDIA was up a couple percentage points, came negative. I said, you know, I'm going to buy it here. Let's take some again. We already took profit on the upside, and I was just holding everything else. Then I made a couple of those day trades. Then the market started coming down on the Apple news. I said, I don't want to get trapped again. So I closed my MNQ. I had $900 profit. That was the one you've been seeing from a couple weeks ago. Got out of that one with profit. I closed my MES short. I also had a short, but I said, hey, let me just take some profits. Wanted to clear things up. Closed the Amazon. I was up a little bit more. I was actually, from yesterday, that one didn't move, but it was Meta. But Amazon, I had $100 profit. Closed that. And then you see the Meta 2. Closed out of that one. I got about 250 between both of those, maybe a little more. Then did an ES flip. The last one, I lost $100 on the day. I was going for something. It wasn't materializing. If I held it, it would have actually been like $1,000 profit, but I was trying something with the book map there. I wanted to go for it, but I was pretty content on the day. I was like, I don't want to get trapped. I like what I'm holding. Closed out of that, and then those were all of the trades. But again, a very, very good day. Add this to the fact, and now to come to the holdings, I have all of them for you, but now you are watching me clear these, and even then, when you're seeing these losses and what I'm holding, I'm down with these. But what you got to keep into consideration, we have been realizing a lot. So far, I mean, to give you a balance, because we're going to see what we have remaining, the futures alone, I've done about 20,000 in cash realized. So we already have it in the account, and then the shares have gotten another 7,000. Then there was a couple of those old plays like Meta and like TLT, but I'm not even adding those into it, but those would be some too. But I'm getting clobbered on the UNG and all that, but let's start with what we're holding. And now, like I'm saying, you can see we are clearing the board, and now I have a lot more room to go, but I still have some in play. But the 6B pound still down on that one. Again, I want to wait to close it out better. Otherwise, we could get squeezed, but still in that, the ES, I'm holding the options. Remember, I still have upside exposure, so those are actually have a $250 profit. We made these free a couple weeks ago, so I'm glad that they're still holding, but that was my midterm rally one. You should have probably heard this. The M&Q now, again, you see that's cleared. That's off the board. The MYM, that's the Dow short. I'm down $4,000. So again, it's like I realized that today. I'm kind of viewing it as break even, but again, it's down. And my whole idea is if we get any downside, if I could close any better than $4,000 loss, all of that will just be more money in our pocket since we've got to realize a lot more along the way. But this is there, and even holding this, I'm going to kind of justify this with some downside or upside here and there. But there's that one. I went long on the bonds yesterday. That one didn't show up on the trades again. I did this there late at night, or like afternoon kind of. It was hard. Again, it shows up on the day before, but not on the 18th. So still holding that one, but I just think we might get a bond bounce. I was up $300 on it today and it came down, but even then I was like, if the market really is going to rally, I don't think the bonds will disagree this bad, and eventually they'll get a bid. So I'm really looking to trade this, but I'm just playing this 4% volatility on the 10-year. You know what I'm saying? But holding that one, and then the Adobe's there. I don't know. I was going to show you that on the other screen, but that one's still there, down $500. That's one of the older trades. The ACAM, remember, that's my big play. It's kind of like the option on the ES. And remember, I'm playing buyout rumors, head hold till end of November, only down $300 on that. Remember, it's bigger, but like I was saying, if the NASDAQ goes up, I was assuming some beta and that we get a little bit with that. So there's that. And now let's go to the losers. This is where it gets a little bigger. And now even then, between the Dow and then the UNG and anything related to natural gas, those alone, it's $12,000 unrealized. So again, we've realized a lot more. I'm holding these, and now UNG and Boyle, you see them here, the QG and all of these. Before I get into that though, we have a plan with it is what I'm saying. So the better that we could close on these and riding through, again, I just think coming into the end of winter, man, it just, the reality of winter will have to, that's what we're going to see. And you pretty much, you could have a lot of things in the market. People could talk about this or that, but when it's all said and done, we can't fool a lot of the weather and just the demand and the supply when it's there. So we're going to find out, but I'm in all of these now to the QG. This one was a mistake. I made this the other day. That's a natural gas one, but my mistake is this contract expires in 8 days. It's a future, but it does have an expiration date, so I have to roll it over. Otherwise, it's going to deliver me on all the natural gas, or they close you out. But in this case, I hate the contracts. I don't like to trade them around the open and close of the expiration. So this one, we're going to do something. I need more time. I need to get out of that. But then Adobe down on that, the Arch 29, then Boyle down $3,000 on 150 shares. Disney, I added that one. That's the $89 from today. And then the UNG down $3,600 on about 500 shares. So those are pretty much it. The other ones that I'm missing, any like small cap day trades, SMMT and Yash, I'm down on those. Got absolutely destroyed, but that's before we kind of were getting our feel with on any of these, but I'm still actually holding those and still down on them. But that's pretty much everything now. Again, we've taken a ton of profit. We're still in the game, and now where it changes from here, it's going to expose me to more risk, and now I could balance it out. But if we keep hitting some of these day trades and other stuff and get a good balance, again, dollar for dollar might be able to help us out. So that is everything. It's going to be wild. Again, I'm watching everything I put on the place tomorrow, and we're going to see where it is. Get ready for more post earnings, and it is going to get wild, ladies and gentlemen. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, faith is like the eyeball. Oh, yes, baby, you can look at things all you want, but it won't change it. Same thing with faith. Faith is a lens. You gotta believe. You gotta have the vision. And guess what? Even if you don't believe what I believe, I know what I'm saying. You don't like this bull, beep, 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 corny cliche. I get it. I understand. You don't think I'm a human. You don't think I grew up in the same social media world you did. Come on, who you fooling, dog? I'm just saying, you got to have some belief in how you view things. That's going to keep you in the game or out of the game, especially with how crazy this has been. So you got to stay focused, stay locked and loaded. And Chad, you've been killing it. Amazing. I'm a proud father, man. You have no, amen, bro. That's prayers answered. So let's keep getting it. Stay focused. And remember, there's been a couple of battles that we've won, but there is still a bigger war with the markets until the next year or the end of the year, and then the next quarter, beginning of the, oh my, don't even get me started. started. Chad, I love you. God bless you. Drink that water. I will see you in the morning. And God bless America. And finger to the sky, man. Oh, and God bless the long term. Stop just, I hope you've been long term. He knows when you've been long term. He knows when you did not long term. He knows it. So long term for goodness sake. Hey. Okay, I gotta go.